Rachel Reeves has just delivered the 2025 spring statement. And although we had no surprise tax changes, phew, there were some significant developments that I want to make you aware of.
The OBR have today revised down our growth forecast for 2025 from 2% in the autumn to 1% today,
Including a surprise £4.1 billion deficit after the £40 billion black hole that we previously had. Before we dive into this video, I want to just make you aware that this video is not intended to be political in any way. I'm purely sharing the analysis. First, let's discuss the economic outlook. The Office for Budget Responsibility, the OBR, gave us some sobering news today, halving the UK's growth forecast for 2025 from 2% to just 1%. Chancellor Rachel Reeves didn't even sugarcoat this when saying, "I'm not satisfied with these numbers." The OBR points to two key factors for this cut. Number one is structural weaknesses, particularly in productivity. And number two is cyclical factors like higher interest rates, increased gas prices, and global economic uncertainty. Although it's not all doom and gloom, the OBR does project growth to improve in the coming years, as you can see on screen now. In 2026, they're predicting a 1.9% increase. In 2027, this is 1.8%. For 2028, it's 1.7%. And finally, in 2029, it's 1.8%. Next, let's discuss inflation and interest rates. Inflation does remain a concern, with the OBR forecasting an average of 3.2% this year. However, they do expect it to fall to 2.1% in 2026 and then hit the Bank of England's 2% target from 2027 onwards. In addition to inflation, mortgage rates have also been negatively impacted for borrowers. Unfortunately, the OBR does predict that mortgage rates will rise from 3.7% in 2024 to 4.7% in 2028 and then stay there in 2029. This is higher than previously forecast. Therefore, if you are a homeowner or looking to buy a house, you might want to consider this in your financial planning. Next, let's discuss the tax burden to individuals. Now, here's a statistic that might raise some eyebrows. The UK's tax burden is set to reach 37.7% of GDP by 2027-2028. This is the highest level since World War II. While the Chancellor didn't announce any new tax increases in the statement, previous measures are contributing to this high tax burden. These include frozen income tax thresholds until 2028 and increases in the employer national insurance contributions from 13.8% to 15% starting April 2025. It is worth noting that while the NI increases is officially a tax on employers, the OBR does estimate that 76% of this cost will ultimately be passed on to workers through lower real wages. Next, let's discuss public finances and spending. The Chancellor has admitted she is walking a tightrope between fiscal responsibility and investing for growth. Without the measures announced in this statement, the government was facing a deficit of £4.1 billion by 2029-2030. However, Reeves claims that her interventions will turn this around, projecting a surplus of £6 billion in 2027 to 2028, £7.1 billion in 2028 to 29, and £9.9 billion in 2029 to 30. To achieve this, she's told us that some tough decisions have been made. Day-to-day spending growth has reduced from 1.3% to 1.2% per year, above inflation. And departments outside of health and defence could face cuts of up to 11% of their budgets. Now, let's discuss the changes announced today. First, we have welfare reforms. One of the most debated aspects of this statement is welfare reform. The changes are expected to save £4.8 billion, with a net saving of £3.4 billion after accounting for employment support and implementation costs. Key changes include the Universal Credit Standard Allowance increasing from £92 to £106 per week by 2029-2030, and the Universal Credit Health element for new claimants cut by 50% and then frozen. The Chancellor defended these changes, saying, "We believe that if you can work, you should work, but if you can't work, you should be properly supported." However, the government's own assessment suggests that these reforms could push 250,000 people, including 50,000 children, into poverty by 2030. Second, we have changes to defence and national security. In response to the global security challenges, the government is committed to increasing defence spending to 2.5% of GDP by April 2025. This includes an additional £2.2 billion for the Ministry of Defence next year. Some of the key initiatives behind this include 10% of the defence budget equipment dedicated to novel technologies like drones and AI, a £400 million protected budget for UK defence innovation, regeneration of the Portsmouth Naval Base, and finally £200 million to support Barrow, a town central to the UK's nuclear security. This increased spending will partially be funded by reducing overseas aid to 0.3% of gross national income. Third, we have housing and planning reforms. The Chancellor is betting big on housing and planning reforms to drive economic growth. The OBR forecasts that these reforms will result in UK house building reaching a 40-year high of 305,000 homes annually by 2029 to 30. An extra 1.3 million homes built between 2025 to 2030. A permanent increase in real GDP of 0.2% by 2030, which will be worth around 6.8 billion, and then 0.4% within a decade, worth around 15.1 billion. To support this, the government is investing £2 billion in social and affordable homes next year, and over £600 million to train 60,000 more construction workers. Fourth, we have increases to civil service and government efficiency. The Chancellor announced a £3.25 billion transformation fund to help reduce government running costs. This includes a voluntary exit scheme that could see up to 50,000 civil jobs cut. The aim is to make the state leaner and more agile, whilst also delivering more resources to the front lines. What does this mean for you? First, we've got mortgage rates. If you're a homeowner or you're looking to buy, be prepared for potentially higher mortgage payments in the coming years. Two, we've got taxes. Whilst no increases were announced, the overall tax burden is set to reach historical highs. This could impact your take-home pay and your overall financial planning. Third, we've got the cost of living. The Chancellor's claim that households will be on average over £500 a year better off under the current projections. However, with inflation still above target and potential impacts from welfare reforms, many families may still feel the pinch. Fourth, we've got the housing market. The focus on increasing housing supply could potentially ease the pressure on housing prices in the long term, but this remains to be seen. Fifth, we've got the job market. Increased defence spending and focus on construction could create opportunities in these sectors. However, public sector job cuts might offset some of these gains. Number 6, we've got public services. With tight controls on day-to-day spending growth, you might see impacts on the quality or the availability of some public services. It can be said that the Spring Statement 2025 reflects a government trying to navigate challenging economic waters. While the immediate outlook appears tough, with halved growth forecasts for 2025, there is cautious optimism for the medium term. The Chancellor is betting on planning reforms, defence investments and efficiency measures to drive growth whilst maintaining fiscal discipline. However, with a record high tax burden and significant welfare reforms, the impact on households and the broader economy is yet to be seen. As we move towards the full spending review in June and the autumn budget, we'll be keeping a close eye on how these measures play out in practice. Will the planning reforms deliver the promised growth boost? Can the welfare system support those who need it most whilst also encouraging work? And how will households cope with the ongoing cost of living pressures? These are the questions we'll be asking in the months ahead. For now, it's clear that while the government is aiming for stability and growth, many middle-class Britons may need to brace for some financial challenges in the short term. That's all for our breakdown of the Spring Statement 2025. Thanks for watching, and don't forget to comment and subscribe for more economic analysis going forward. Until next time.